We are Lady Ablon from the University of Lausanne, and this is a story of how an outstanding Swiss semiconductor company went from being a technology leader to a technology bleeder. We recommend a sell on Ublox with a 35% downside. We're pessimistic on the future of this company for 3 reasons. 1, the management is betting the farm on hyped technology. 2, the R&D machine is consuming all the free cash flows inside. And 3, the most important markets are under siege. This is indeed a sad story, but first, let's learn more about Ublox. Ublox is a fabless semiconductor company that makes chips and modules that power the GPS system in your car, that allow you to unlock a shared bike and allow you to fly a drone. Now we have a map. Let's look at history. In 1996, Bill Clinton made the US military GPS system available to the public. Spotting an opportunity, a young team of engineers from ATH started Ublox. As they were figuring out how to make their first module, the GPS system had already been operational for over a decade, so all of the infrastructure was already in place. In 2009, they moved to cellular markets, realizing that they could sell cellular modules to existing customers. Cellular markets are much bigger, but on this island, there are competitors. Keep in mind that cellular modules are different from cell phone chips, a separate continent that is much, much bigger.
The biggest problem with Ublox is they've been spending more and more developing products that nobody is buying. To explain this, let's go back in time. The mysterious land of futuristic IoT was first discovered in 2014. On this frozen continent, there was no infrastructure. Nonetheless, everyone sent explorers there, and Ublox even set up a research camp. Research camps are very costly. So why would Ublox spend so much when they can barely afford an R&D budget of just 2% that of other explorers like Broadcom or Qualcomm? The hype cycle says that people are very bad at guessing the timeline of technological developments. This sounds like Ublox management, but they're not alone. Look at Ublox stock price alongside Google searches for IoT. Investors piled into Ublox in 2014, viewing it as a thematic investment. Currently, IoT is at peak hype. So imagine what will happen to Ublox stock price when investor perception catches up with reality. This hype has driven Ublox to invest in futuristic products. They now have 2 chips for autonomous vehicles. I agree. Autonomous vehicles are very cool. But Ublox has been investing in the V2X chip since 2014, and there are no sales yet. The NB-IoT chip is a cellular chip, but cell towers across the world do not yet support it. So when will we see some sales of these products? According to Gartner, no time soon. Ublox doesn't seem to realize the uphill battle they're facing. We can see this in their persistent misallocation of resources. After a decade of investing in cellular and 6 years in short range, Ublox has been unable to replicate the success they had almost immediately in GPS markets. Currently, Ublox has 65% of R&D assets in cellular and short range, which are producing only 27% of gross profit. There's something wrong with this picture. The proof? Return on invested capital has fallen from 39 to 17%, while investors wait for profits that aren't showing up. Ublox is trying to break the ice in IoT technology, but this time is different from 1997. Back then, all of the infrastructure was already in place. This time, there is no infrastructure and no markets exist yet for these products. The worst part, by the time markets arrive, these products will be obsolete and the market will be full of copycats.
Ublox is expected to spend 570 million Swiss francs on R&D over the next 5 years. This is more than their current market cap. Let's talk about it. Ublox has doubled its R&D spending since 2014, and it will continue going up. Given that Ublox capitalizes 40 to 50% of its R&D, most of the pain hasn't hit the income statement yet. When investors see that Ublox is spending 28% of its revenue on R&D compared to 18% for Western competitors, they should be asking questions. Nearly all of R&D spending is salaries, which management considers as a fixed cost. Making matters worse, Switzerland has the highest engineering salary in the world, so competitors can generally hire 2 engineers for the money Ublox pays 1. So in the end, what are investors getting for all of this R&D? We're expecting revenues to increase at a 5% CAGR over the next 5 years, most entirely driven by the product mix effect. The negative price effect comes from a yearly average selling price decline of 10%, meaning that Ublox constantly needs to release new generations of products just to keep its head above water. The product mix effect comes from those new generations and sales shifting towards more expensive and sophisticated products.
Investing in futuristic products might be an affordable luxury if Ublox wasn't currently under siege. In 2015, the semiconductor world changed when the Communist Party of China announced the Made in China 2025 strategic plan. The goal of this plan is to develop the Chinese semiconductor industry to the point it is self-sufficient and to compete head-to-head with the American semiconductor giants. To achieve this goal, the government raised a fund which is almost as large as the R&D investment of all the American giants combined. In this industry, the Chinese are known for offering 80% of the quality at 50% of the price. How do they do it? Take a look at how low they set the gross margins. Of course, the most likely customers for Chinese products are Chinese companies, and Ublox is generating 27% of the sales from China. China's ultimate goal is to compete in the smartphone chips markets, but a semiconductor company must walk before it can fly. And Ublox products are perfect runway because their products are relatively simple. Ublox is quickly losing market shares, and while its bread and butter markets are under siege, they are making things even worse by diverting R&D resources to the frozen continent of futuristic IoT. So how successful has the siege been? This is the growth of those Chinese firms that are selling the exact same product as Ublox in 2014, 2018, and in 2020. You can see that obviously the siege has been pretty successful.
Now, let's take this story to numbers. We expect a 12 percentage point loss of market shares in APAC, driven by Chinese customers shifting to Chinese products. A 6 percentage point loss in America and EMEA, driven by increased competition as everyone is losing sales in APAC. And market share losses to be compensated by growing markets, resulting in a 5% revenue CAGR. The 3% CAGR in positioning and the 6% CAGR in cellular are highly reliant on professional drones and asset tracking markets, increasing the risk of a shortfall. EBIT margin will decrease by 7 percentage points, driven by lower margin products and increasing R&D amortization. We expect management to miss their 2023 free cash flow, EBIT, and revenue guidance. This is nothing new. History of guidance misses shows that management underestimates the challenges they're facing. Our target price of 42 francs was derived based on a DCF valuation weighted 75% and a multiple valuation weighted 25%. The 3-stage DCF valuation was based on the free cash flow to the firm method. Using a WACC of 8.4% and a terminal growth rate of 3.8%, we're able to target price of 44 francs. The WACC was computed using the KPM with a bid of 1.4 and a market
1 minute remaining.
of 7%. For the multiple valuation, we use a forward-looking enterprise value to sales multiple, as the peers are having different R&D cost accounting. Under this approach, Ublox currently trades at a 42% premium, setting the target price at 38 francs. To complete our analysis, we identified 2 types of risks: the risk to the company and the risk to the recommendation. Scenario analysis on the new board member, MBIoT rollout, recession, coronavirus, and activist shareholder risk shows that only the last threatens our recommendation. To conclude, because of bets on risky technology, increasing R&D spending, and threatening new competition, we recommend that you don't buy the hype. Thank you for your attention, and now the floor is open for questions.
Hi,
Go ahead.
Sorry, go ahead.
Does Ublox have a lot of sponsorship from certain institutional investors? In other words, do you have some big gun tech analyst who's really out there pushing the stock to these kinds of evaluations?
Sorry, is the question about mostly the ownership
Trading.
of the company?
Yeah, the trading of the company and the ownership of the company.
Sure.
The valuation seems to be pretty excessive. So obviously there's some pretty good sponsorship out there on the part of some institutional investors. Have you taken a look at that?
Yes, actually, I think the big issue that's going on here is the market is really overinflating the value of this company. And we think that's mostly due to 3 reasons. So first is that we know that markets believe in hype. To give you an example of this, currently Tesla is trading at about twice the value of Volkswagen. Well, Volkswagen is selling 25 cars for every 1 car that Tesla is selling. And this is a big time hype stock. Second reason for the overvaluation is we have a persistently overly optimistic management. Every year we showed you how management has missed their guidance for 5 years in a row. And every year they come back with a story about how there were negative external influences. And next year is when the market's really going to turn around. The third thing, and exactly what you pointed to keep tabs on big hype and optimistic management, we would hope that there would be a good analyst coverage. However, Ublox is very poorly covered by analysts. There's very few, and they release analysis very infrequently. This is made only worse by the fact that Ublox is a very lack of transparency in both their business operations and their financial statements. So we think that this is these 3 reasons kind of combine to see this inefficient pricing.
My question is actually on their R&D. As you've pointed out, they've been investing a lot on R&D, much more than peers. So how does the new product pipeline look like? And why are you not positive on their new product pipeline? Because a great new product can actually turn things around.
Yes, so we are worried about Ublox because they try now to enter the the IoT and cellular markets. So you can see like all those products here, 2G, 3G, 4G, 5G are cellular products. But now we have Chinese competitors that have as a goal to replicate this products portfolio, such as Quectel, Syncom, Fibocom. If you look at the same matrix a few years ago, it will be almost blank, and Ublox will have still an advantage of those products. So now we are worried that Ublox is trying to compete in this market where there is a lot of competitors that have the advantage of being supported by their government. So we are not advising Ublox to reduce the R&D investment, but to reallocate the R&D investment where they have the advantage. And where they have the advantage is in the positioning market.
Thank you.
Are the US and Chinese competitors flexible enough to put in the market the future products that Ublox has developed, or there are any entry barriers that Ublox has against them?
Yes, when it comes to the futuristic products, the disadvantage that Ublox has on this market is that it doesn't have capacity to handle this period until the market are ready. So the competitors from especially US, when we speak about US semiconductor giants, they have huge R&D budgets. They have a lot of money, a lot of resources to handle this period, even if they don't actually generate a lot of revenue there, but they can be there for their reputation. But Ublox doesn't have this capacity.
Do any of their product lines, are they attractive enough for somebody to possibly acquire them?
So yes, it could be a possibility that someone acquires them. However, when you acquire a tech company like Ublox, what you need to know is that after 2 to 3 years, your products are obsolete. So you would have to acquire Ublox and continue those investments. And we would think that, for example, for Chinese companies, it could be a good idea to buy Ublox in order to achieve the 100% quality. However, the question remains if those Chinese companies will be able to retain the employees of Ublox, which is the core values of Ublox, our employees.
I have seen that free cash flow has been sustainably positive on a long, if we take historical cash flows, they have been positive. CapEx have been adjusted accordingly. You've been highlighting that R&D is being like too heavy in their development. So do you consider, could you go back on R&D and just explain more on, do you think it's the allocation that's wrong or the amount in terms of strategy? Because the company has enough cash to allocate for R&D.
Yes, Ublox definitely has a lot of cash. Currently, it holds 130 million Swiss franc, which is more than their annual R&D budget. But when we speak about R&D, and so the strategy of Ublox is that a cash flow from the operating activity covers the capitalized R&D that they have. And in the past, yes, they showed that they were achieving this goal, though over the last 2 years, they were actually not able to do so. And we expect that this tendency will continue over the next 2 years, and then they will be able again to cover their capitalized R&D by their operating cash flows.
One question about the dislocation between the current stock price and the future you are foreseeing. Why do you think the stock price is not presently fully discounting this tough scenario that Ublox is facing in the future?
So you can see that the first drop that we had in 2018 was mainly driven by the intensifying trade war between the US and China. Nonetheless, now we expect the price to drop again because of those investors jumping from the hype train. So this is why we think that even there was a drop in the stock price, there is another one coming.
Okay, and the company has cash, but could you tell me how leverage is the company in order to see if it's strong enough to face these tough times ahead, and if it's going to be able to weather the storm?
Yes, as I mentioned, Ublox has in cash 130 million Swiss franc, and currently they have 120 million Swiss franc of debt outstanding, which consists of 2 issues of corporate bonds, 60 million each, and one will be maturing next year. But the interesting thing about Ublox, so why they have all this cash accumulated, because all of this money that they raised in 2015 and 2017, it wasn't spent. So they have an ability to cover their debt next year, and their intention is to roll over those bonds.
You mentioned rather poor coverage on the part of analysts. Does that mean most of the shares are held in passive investment vehicles, unit investment trusts or ETFs or whatever, indexes?
So yes, the shareholder base is well diversified as it is expected in this industry, but is mostly institutional investors. And we have the biggest shareholder being Bailey Gifford, with owning 5.5% of the share outstanding.
How has the company's revenue from the China market been historically, and the customers? Has revenue been declining?
Time.
Thank you.
Thank you very much.
Very much.
Thank you.
Thank you.